All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com, your one stop shop for all things trading. Hey, this is coming to you from the live trading room. We've got a great community of, I don't know now, almost 300 members who trade together throughout the trading day. I share what I'm trading, what I'm looking at. I share charts. I do a little bit of trader training each afternoon live on the mic. I give you my entry price, stop price, target price, reasons for the trade, and all that stuff. I answer questions and on and on. It's a great place to hang out during the trading day. Nobody should trade alone. You're much better off with more eyeballs than your own and more brains than your own because the rest of us as a community can see things that any individual cannot. So if you want to join us, you go to drstoxx.com, click on the subscribe button, scroll down to live trading room. Coming up next week, we should be launching our new live options room just for option trades. All righty, guys, let's get down to work. We're running out of daylight here. It is the 3rd of January. It is a Friday afternoon, and it is about 3:20 p.m. No, almost 3:30 now. So running out of daylight, but let me go over to indexes and show you a few reasons why, for at least technical reasons, we need to be a little bit cautious. Then I'm going to show you some really good news that should not only give us a good week coming up, but maybe a good year coming up. And then we're going to drill down to some individual charts of stocks that I think are set up very, very nicely for a good run higher. So first of all, the S&P 500. Let's go with the SPY, shall we? So, as I said many, many, many times, the head and shoulders top pattern tends to fail. In fact, I think more often than it ever succeeds in going to the target price. It was a big flush out yesterday. Everybody was getting short, broken support. Oh no, panic, panic, panic. Get rid of all the shares, buy some puts. Ha ha. And then the market was right back up again to close above the neckline. We had a gap up this morning and it has just been up ever since. So that's a complete negation. That is a very bullish move. However, and this is a big however, if we start drawing in some trend lines underneath some of these support lows, you're going to see that we are still in some cautionary mode. This could just be a little bit of back and fill. This could just be a one-day bop. This could just be, the I don't know what it could be, but is not necessarily bullish. We are still under the 50 period moving average. We are still under the 21 period moving average, and we are still under a former support trend line. Now it is resistance. So this is typically the place where you see a ceiling form. You get price bumping up against that ceiling, and then it rolls over and starts to tilt to the downside again. That was my map for next week. I really thought this week was going to be very bullish, next week bearish. However, this week turned out to be mostly bearish. In fact, quite a bit bearish. Today is really the only day this week. We did have one holiday, but the only day this week where stocks have been consistently higher and higher across the board in all kinds of different sectors. It's really been a very good market day. We're up over 1.5% in most of the indexes, most of the sectors, and all that's good. However, as I said, we're still under a lot of overhead resistance. I have a feeling next week would be a little more challenging than today. Today's been an excellent day. We made a lot of money today. We're still making money today as I'm looking at my profit and loss. But next week could be a little bit more challenging. However, I don't think it's going to be the down market that I thought we were going to get. I think that's been postponed maybe a week, maybe a couple. Then we get some discounting, and we have to get some discounting somewhere along the line to take into account a new Trump presidency with all kinds of unknowns, right? We're pretty sure that he's going to be cutting taxes. That's good for the market, good for the economy. At the same time, he's going to be raising tariffs. He's going to be engaging in trade wars. He's going to be negotiating for all kinds of stuff, which doesn't always pan out very well for the economy. And We don't know about any of that just yet because it hasn't started. That doesn't start till January 20th. So we've also got a Fed that doesn't seem to be cooperating very much with helping out the market. That's a headwind. And we've got a whole set of earnings coming down the pike that may or may not be all that great. So lots of caution, lots of reason for caution. But let's look at NASDAQ, and then I want to show you some really, really, really good news that I think will sustain us over into the rest of the year. Here's NASDAQ. Now, NASDAQ on a support line basis is doing much better. So the support line looks very much like that, and we held it yesterday despite a big flush out on heavy volume, getting rid of all the weak hands, all the new longs, all the little retail traders that get too scared to hold on to their dips. Um, meanwhile, the big money traders were buying that dip and very happy to take shares out of the pockets of retail traders and put it into their own because they knew that today was coming. So, however, this is in much better position than the S&P because we are above a lot of resistance and we're passing out of the pink zone in an uptrending LRC. Buy the pink in an uptrend, sell the blue in a downtrend. We're above the 50-period moving average. The only thing that we have to get back up above is a little bit of a cluster of highs right here and the 21-period moving average. Both of those pretty skimpy in terms of resistance. I suspect we'll be up at 530 sometime next week. For SPY, I don't think we're going to get too much past, let's call it 595. If it can get above then, all bets are off. We should see 600 in short order. But if it can't hold 595 and starts to reverse, oh boy, we're going to have to put back on those hedges. So we had on a bunch of hedges this week. They played out very, very well. We covered most of them either yesterday or today. I guess it was mostly today. We only had one out of the 5, I think. Well, no, we had a couple that we closed out earlier in the week. But anyway, we had about 5 or 6 hedges on. All but one made money. We're in a bull market. My mantra is that if you make money on a hedge in a bull market, you're doing it perfectly well. You don't have to make a big profit. Just a little scalp is fine. Okay, deep breath. Let's take a look at the small caps. They're doing much better today, but man, they have a lot of overhead to get over, right? So this line right here, 227, 228 is a massive, massive ceiling. I mean, that is concrete through and through. I don't really see how small caps, in the absence of falling rates, in the absence of a healthier bond market, in the absence of a dollar that's starting to weaken, I don't see how the small caps are going to get up past that area. All right, we did buy some very early today. We bought some M2K, which is the micro E-mini futures contract for the Russell 2000, which is the same as IWM. But that's a short-term trade, right? We're just looking for a day or two of upside. It's going to come up here and hit 226, 227, and not be able to get through, at least not right away, without some kind of a miracle. All right, so we can be bullish on QQQ and tech in general. We can be cautiously optimistic about the S&P, but it's got to get up above 595. We need to be modestly pessimistic about the small cap index, at least for now. I know Tom Lee is all about small caps, the summer of small caps, the winter of small caps. he's still waiting for the big breakthrough of small caps. But man, it's just not behaving very well. You've got a lot of negative volume balance down here. You had a huge slide on the Fed day. Huge, huge, huge. And you don't overcome that real soon. So I like what's happening today, but it is a short-term bounce. That's about all we can hope for. Okay, let me show you some good news, however. Good news, which, of course, you never know, doesn't mean it's going to pan out in past performance. Where is my... Oh, gosh, hold on. Put that aside. Let's put that aside. And give me just a moment. Here we go. So this is potentially good news, and it actually is very good news. But as with all data points in the market, it is only one data point, and the market is in response to hundreds of data points. And so it doesn't have to obey this one. But this is showing us a very strong historical trend. And generally, the trend is this: when the market gets very constricted, where are my hands? When the market gets very constricted in terms of how many stocks are performing well, most stocks are not performing well. Very few stocks are performing well. When that happens, it reaches an extreme level. When we hit that extreme level and then we project forward from where that usually lands, we start to see a lot of bullishness come in. Now, I know you can't see this chart very well, but this is what it's saying. We just had a red dot. That red dot down there means very, very, very low percentage of new highs in the S&P 500. 500 stocks in the S&P 500, let's say on a really good bullish day and a good bullish market, 400 of them hit new all-time highs. I don't think it's that much, but anyway, just giving you an arbitrary number. Now, as the market starts to correct, as things start to fall, as stocks start to, uh, you know, move away from the 52-week highs, you're going to start seeing the numbers of stocks hitting new lows going up. You're going to see fewer and fewer stocks hitting new highs. So maybe it's 300 one day and 50 hitting new lows, and then it's 200 the next day and 100 hitting new lows. So what this is telling us here is that we just hit an extreme low print. This is the last trading day. This is the last trading day of 2024. On that day, we hit the lowest level of new highs in the S&P 500. It's down around 1 or 2%. It's very, very small. And when that happens, we project forward a week, 2 weeks, 3 months. What is it? 1 month. I can hardly read this myself. 2 months, 3 months, 6 months, 1 year later. In every single case, the market is higher. In every single case, from that point on, the market is higher. So we're in a place where the S&P 500 just 2 days ago hit the lowest level of new highs that it's seen since, well, it happened again in 2023. It happened in 2022. You can see it does happen about every year or year and a half. So it's not terribly unusual, but we can track every one of those. And 1 week later, 1 month later, 6 months later, 1 year later, the market is higher. Yeah, not every single time, but on average, much higher. Okay, there's point number one. Here's another data point. The McClellan Summation Index. This measures how much volume per dollar amount is going into the market and how much is coming out of the market. When you get that differential, right, you can have a zero equilibrium where they are exactly equal. But if more money is going into the market than is coming out, it's a positive number. If more money is coming out of the market than going in, it's a negative number. And when you get down into some super, super low negative numbers, you tend to hit an extreme print. Market tends to bottom out right there. We just hit one. 31st of December last year, just 3 days ago, we hit an extreme low print. If you take all those occasions where that happens, when it gets as low as it just did, and I think this goes back, I'm not sure how many years this goes back, but there are 102 instances in this look back period of when that happens. And in every single case, 100% of the time, the market is higher over the next year. How much? 31.4%. That is a very good year. Very good year. So it's a little unusual, right? Because we're getting these low prints on internal breadth and internal strength of the market, showing that it's really, really bad. At the same time, we're not that far from the all-time highs, as you just saw in the charts. What's the cause of that? Well, the cause of that are the mags, right? You've got 7 or 8 or 10 stocks at the very top of each index. They're weighted indexes. Those guys are doing really well. Everybody else is not. Right? So if we can start to see that print starting to move higher, we're starting to see broader participation in the market. You're starting to see stocks that have been beaten down. You've got energy, healthcare, biotechs, all the usual suspects. When they start bouncing back, they bounce back with a vengeance. 31.4% over the next year is what we can expect based on this 100% of the time over 102 signals. That's very good news. Now, one more. So this is more of a breadth reading, but this is also price strength. So when you have you have a certain number of stocks in the S&P 500 that are trading above their 200 period moving average. That's, long-term uptrend, and trading below their 200. That's a long-term downtrend. And when that number gets to be very, very low, the stocks trading above their 200, when that gets really, really low, down below 20, right? Maybe even 15 out of 500. You have very few stocks above their 200 period moving average, which, gosh, if only 15% of the S&P 500 stocks are above their 200, that means 85% are in bear markets. In a market that, it's just incredible. The S&P 500 is up near all-time highs, and 85% of the S&P 500 is in a bear market. Hello? How does that happen? Well, I just told you how it happens, but it's just very, very unusual. Now, here's the good news. 99% of the time when this happens, we get this low reading. And there are 183 instances of this over the look back period of whatever it is. 54.3% of the time, 99% of the time the market moves up, on average, 54.3%. Wow. Okay. So there you've got 3 data points, really, really positive, extremely optimistic about the market going forward. Does that mean next week is going to be bullish? Absolutely not. We know from that first reading that, yeah, it should be. On average, it should be, but no guarantee. But I do think next week is going to be a lot more bullish than I thought it was. I thought next week was going to be hard. I don't think so, especially for the NASDAQ. Maybe also for the small cap, but the S&P is the one I'm a little bit most worried about near term, just very near term, because it doesn't have much more upside before it hits some very significant resistance. Okay, I don't want to save that. I just want to close that out. Now, let's take a quick look at Bitcoin, because we are long Bitcoin. It was a little weak this morning. We bought it yesterday. It was big up day yesterday. Or was it today? I don't want to deceive anybody here. No, we bought it actually yesterday. Yeah, we bought it yesterday. Had a good start. This morning it was a little weak. Those stayed above our entry price. Tagged the 21 period moving average. You can see how important that line is. Good things happen above the 21. Not so good things happen below the 21. And then it was a follow-through day on not real good volume today, but yesterday was very good. Yesterday was a beauty. So this looks good, and it is cracking, as of today, the pullback line. It broke out yesterday. That's why we bought it. Line is really right there. It broke out yesterday. That's why we bought it. And a follow-through day today. That's technical analysis 101. That's bullish, bullish, bullish. Your first target is up here, the former pivot high around 108. We're looking for it to get up into the blue zone. 110 is our target price, but it could get a fair bit higher than that. We'll have to see when it gets up there. We did sell out of our oil trade. It was up here in the top of the LRC in a downtrend, so we don't want to hang on to that too long. That can reverse very quickly, just like it did right here, just like it did right here, just like it did right here, just like it did here, just like it did here, just like it did here. We don't want that to happen to our profits. We have a very nice profit. We took a 6% overnight swing trade in that. Happy with that. Moving on. See you next year. All right. Last thing we want to look at, greens list. Let's go worst to best. QFIN is a very good quality capital markets. It's like the Visa of China. Waiting for this one to give us a buy signal. Hasn't given us one yet, so it's in wait and see mode. Netflix is down here at the pink zone of an uptrending LRC, but it is below the 21, and it's not giving us a buy signal yet. We're going to keep an eye on that. LRN, I do like this one. So it's a nice soft pullback and a strong uptrend. Here's your power gap right here on earnings. Never looked back. Nice little sideways soft pullback and then a breakout today. You could buy that one today, and I wouldn't kick you in the pants for doing that. IBKR is your best bet for a online brokerage. And yesterday was a big breakout move on volume, and today a bit of a follow-through day, a little bit on the weaker side, but nice follow-through. CRM, you could buy this one today. A little inside day doji at the 50-period moving average. It's rising after a pullback. It hasn't broken the downtrend just yet, so that would be your next kind of test, right? You may not want to buy it today. Wait until it breaks out above that line. But you could nibble, do a quarter position today, a quarter position on the breakout, and a quarter position, or maybe third on a follow through day. Facebook breakout today, but not real convincing just yet. Very soft volume. We did buy some Microsoft today just because you have to. Microsoft falling wedge, pink zone, uptrending LRC, big reversal day yesterday, inside day bar today. Classic technical analysis 101. Now, this one has a lot of upside overhead to work through. It's not going to be an easy hold, but we'll just take it one day at a time. GMed is a IBD leaderboard stock. It hasn't been performing all that well, but it is in a very nice uptrend. Soft pullback, 50 period moving average, rising reversal bar today, right at the 21. You could buy half a position there and wait for a breakout for the other half. Axon is the number one stock on my A-list scanner in Market Surge, one of my favorite scanning tools, Market Surge, and that is my favorite scan of all my scanning tools. And this one is just hugging. Inside day bar today, off the 50, off the pink zone, ready to break out. You could nibble now and buy more on breakout. ACIW is in breakout mode. That looks good. JPM is also in breakout mode, but not a very convincing day. Earnings are coming up. Probably best to wait. Wix, I like it. It is IBD stock of the day a few days ago, and a big reversal green bar yesterday. Follow through gap up today. Ready for breakout. We are a long crowd on the 3-bar reversal. Big downtrend, inside day bar, big green stick today. We bought it yesterday. I like it a lot. I like that setup a lot. And it's this number 2 stock in the cybersecurity space. ANF is kind of a weird one. It's a meme kind of stock, but it is right up against resistance. Big green bar today. Looks pretty good for potential breakout, and this can be a very big mover. LITE is not quite in breakout mode, I don't think. Yeah, not quite, but it's a nice push off of this little bullish base in the pink zone. We are long VST on breakout. Big move today. I have a little bit of ARM in one of my side portfolios, and I haven't called it yet officially. And I was looking at this little box right down here, right? 3-bar reversal off support. 3-bar reversal off support. Yesterday, I wouldn't call it a 3-bar reversal, but it is a reversal. And I should have called it officially in the room. I did not. And big green stick today. We are long NVIDIA, however, and that's making up for lost ground there. All right, guys, I'm going to have to let you go. Have a great weekend, all of you. I will be back in the main room to wrap things up for today. God bless everybody. We will see you on the trading floor in just a little bit. Bye for now.